Hi, good morning, everyone, and welcome to yet another episode of Let's Talk About Market. In this, basically, the Nifty index is not doing much. Yesterday, it had come up, but today it has give up. It has given up some gains because of the Trump's comment over tariff. Let's quickly see how the setup is, and basically, there are no major observations today, but there are just few things to highlight based on what sectors or stocks maybe to watch out for, and how do you identify you know which ones will be the one who can perform better in the coming days and weeks. So broadly, that would be the area of discussion today. So let me share my screen. Yeah, good morning, Anand. Please, someone confirm if you are able to see my screen and if you all are able to hear me properly. Just drop a comment. Is my screen visible and are you all able to see me? Uh, Okay, I got the confirmation from the team. Okay, yeah, thanks for confirming. So, if we talk about the Nifty index, yesterday it did attempt to bounce back. The only issue is that around the 40-hour exponential average, it is still struggling. Okay, and it is not giving that sign of a breakout. Broadly, if we see the Nifty index, I have drawn a, I have redrawn the channel. That is because the low was broken over here. Earlier I was drawing this channel, right? If you all remember, but I have adjusted to this low because now the prices are cutting the lower end. So that channel may not be very relevant now. So that's where the redrawn channel is over here. Now, basically, as I mentioned, for the Nifty index, to see first sign of strength, it has to break and sustain above the 40-hour exponential average. Over here, it did manage to break above the 40-hour exponential average, but it could not sustain above it. Okay, so the first point of thinking of a turnaround is a close above the 40, and then I was checking almost at every 100 200 point there is some resistance for the Nifty index. So say even if it bounces back, so somewhere around 29 24 940 to 950 is the resistance zone. Then there is this gap area, so which is another, after 100 points there is a resistance. Then if the 25,050 mark clears, then the next resistance is around 25 250. So basically, if the Nifty index closes above the 40-hour exponential average, which is right now at 24 750, at every 100 200 point there is an up move later on. There is a resistance later on. So one has to keep that in mind. From a medium term perspective, 24 450 to 24 500, that is like a major support zone for the Nifty index. So in case of Nifty index, what has happened is that it has almost come back to the 20-week average, right? If you see over here, it is almost there. However, when you zoom it, you will realize that it has still missed by some 20 30 points or so. So the question may arise, does it test that? Uh, so we need to see, basically 40-hour exponential average is the one to watch out for on the upside. Till that doesn't break, it is possible that Nifty index can consolidate, form a base, or maybe end up forming something like an ending diagonal pattern, right? Sorry, we call it as a rising wedge pattern. Sorry, a falling wedge pattern, in technical charting terms. So it can possibly form something like this and waste time, and in that process it even ends up touching the 20-week average. That is a possibility that cannot be ruled out. But yes, once the 40-hour exponential is broken on the upside, I mean, that's where we have to be then open for higher levels. That is because on the daily chart, what has happened is that the RMI has almost turned around. And, if it was a positive day today, it could have even given a bullish crossover. Okay. But yes, so that's what I mean. If it breaks above this high, above the 40-hour exponential average, you might end up getting a bullish crossover on RMI as well. So this is one thing. Now the weak link over here is basically the bank nifty index. Now why do I say that is because yesterday the bank nifty, I mean, when the nifty was up almost by 0.6%, it was literally flat. Okay, it did not do anything. And now when you see the hourly chart over here, it is trading below the averages and so on, and there is no basically signs of a turnaround in bank nifty yet. The only hope would be that this was an important low which the bank nifty made. So somewhere over here it should halt. And the other thing is that even the 20 week average, that is around this level. So that's where the hope is that somewhere over here it stalls, and then at some point it finds support. If the 20 week breaks on the downside, I mean, that's where it can get a little worse, because the RMI is already in sell. So always remember, whenever the RMI is in sell, okay, like say for example, if you see over here, RMI is in sell, but the 20 period average is held, okay, then it can continue to rise higher and probably make divergence as well, like you see over here as well. Okay, it went into sell, but it was above the 20-week average. So there is a possibility that it can rise higher and end up making divergence before actually falling. So, somewhere over here also, if you see, 20-week was just broken for a day, but then there was a powerful move. So, given that context, 20-week holds a lot of importance in terms of, what the future course will be. If the 20-week holds, then there is a chance that it can rise higher, and maybe it can end up forming a divergence before it eventually has to complete its pullback cycle by going back to the zero line. So that is another important aspect to note. So what I was actually seeing was that if you see all the index, I mean, Nifty is the only one that has almost come back to the 20-week. But over here, if you see, there is still some room left, okay, on the downside. I mean, that is what was making me think that, can there be a bit more consolidation in the Nifty index? Like it does something like this, it forms a wedge pattern or something like this, and it tries to waste, some bit of time. And in that process, probably, small mid caps and all, which have not yet tested the 20-week average, that might end up getting tested. But as I'm repeatedly mentioning, 20-week becomes an extremely important level to watch out for on the downside. Okay, because if that breaks on the downside, then the risk is of a deeper correction. Now, I have already mentioned to you all that looking at the sentiment indicators, the way the FIIs are continuously shorting, or at least not creating long. I mean, in such conditions, to think of a deeper correction right away uh, may not be, frankly, the ideal scenario. The ideal scenario probably can be that we end up seeing a bounce somewhere over here, and in this bounce there is some short covering that happens, which gives further room on the downside if at all it has to fall. Okay, so I mean, that is the ideal scenario that we would be looking out for. So in which case, my best guess would be that even if the correction has to happen, then maybe somewhere around this 24,500 levels, 24,450 levels. I mean, that can be the worst case scenario of the fall that we have started seeing since 30th of June, right? But at some point of time, we might at least end up getting a pullback, somewhere till here. And this is the point, where we need to watch out very closely, what happens next. Now, there is some silver lining to this. That is because when I look at the RRG chart, okay, so I can see now that many of the stocks, basically the momentum is rising higher. Okay. And as I have mentioned to you earlier as well, momentum is like a precursor to the relative strength improvement that is likely to happen. So, say for example, if I do this 1 year, and let me also go to the chart. Okay. Wait. Okay. So you can see over here, always what happens is that momentum will turn around first, be it on the upside or be it on the downside, and then you end up getting a relative strength also, falling down. Similarly, over here, you can see that momentum, started to turn around first, and then you ended up seeing the relative strength also improving. So now see, in even in ICICI Bank, what is happening is that the momentum is falling, and now even the relative strength is not that great. And basically, Bank Nifty, that it is not really performing, and that is because in Bank Nifty, many of the stocks are losing momentum. Now, this, if you see for any of the IT stocks, mostly they will be lagging. So you can see that in Infosys, there is still no turnaround yet. But I think in Wipro, HCL Tech, TCS, we are seeing some turnaround. Wipro, if I do the chart, so basically right now, because it is 11-12, the data seems to be getting, it is loading the data. Yeah. So even over here, there is no sign of a turnaround. So it is, say for example, TCS. I mean, over here, the momentum has started to rise higher from here, which means that the fall is not as, fast as it was falling earlier. And now we have started to see some glimpse of turnaround in, the relative strength as well. So basically, these are all the stocks where we are seeing some momentum improvement. And if I largely see the RRG basket, okay, so more or less you're seeing many places where there is a turnaround in momentum. Okay. Now, as I mentioned, that is like a precursor to even the relative strength also improving. And in fact, there are some stocks, say like Maruti, Grasim, SBI Life, LNT, HUL is the one, where it is turning around from weekly. ITC, it is turning around from weekly. So there is some hope that some of these stocks might make a comeback, and that can also help the Nifty index, basically to restrict the downside over there. But yes, as I mentioned, given that we have such readings that we have seen in in the sentiment indicators that I already discussed, I would at least expect that this zone to get protected in the near term, and especially the 20-week average that should get protected. The only risk is that it has not seen a touch over here. I mean, that is where it can do some consolidation and it can touch. Similarly, for mid cap index, there is some room that is left. Uh, so that can happen. Even in small cap, there is a bit of a move that is left. Even for Nifty 500, that is left. So yes, so basically, this is the only thing I see at this point of time. Okay, which can lead to some sort of a correction or a sideways move or a muted move, or it can so happen that the Nifty index and the other indices just stay sideways, and in the next candle you might end up seeing moving average even further coming higher, and that can lead to a touch maybe in the next week. I mean, that can definitely happen. But when I see this momentum indicators, swing, as I mentioned, this is very fast. So typically when it comes to 80 or 90, that is where we might have to take a step back and see what is happening. But if you see average swing also, so more or less, we have started to see a little bit of positive divergence over here. um, Even if you see the OIPCR, over there is a small divergence that we can see over here. And there is a little bit of uptick, initial hopes of an uptick that we are seeing over there. Even when you look at the diffusion indicator and you look at the percentage of stocks with RMI buy, there is a positive divergence over here. And positive divergence again are sort of a precursor to the up move that we can see. Like you will see over here, see, this was the lowest point. Then after that, over here there was some low. But what was happening was that even in this 1 2 days of decline, I mean 1 2 days of up move, so there is a very high possibility that in this phase there have been a lot of stocks that might have moved higher. And that is where the percentage of stock with RMI buy went up almost towards 80. And then it saw a pullback and so on, right? So this is what is happening right now. Basically, to simply put, what might be happening is that most of the stocks would have fallen like this, but now their pullbacks are higher and they're falling less. So due to which, what happens with the RMI is that it will tend to be something like this. Okay, it will be like this. So now basically, we are at that point where we are sort of trying to get positive divergence in the stock, and the stocks also on the downside are losing momentum. So this is what it seems to be indicating. Even MACD buy, that also is around the lower end of the range only, which again suggests that mostly uh, so you can see over here that there was some hope of a pullback over here, but now again today it is falling. But the broader idea is that it is still at the lower end of the range, and you can see every time where it has come over here, the pace of the decline has halted. Okay, so maybe it might end up seeing divergence or not. That we again need to see. But basically, what I was trying to say was this only, that at some point of time there will be a meaningful pullback. Even here, if you see, okay, this was like a bounce of 23814. So there was almost a 400 500 point kind of up move that we saw, and after that there was a decline. So this is what I was trying to say, that even if it has to fall further, there can be some decent pullback that we can see. And maybe after that, all this oversold readings are relieved from this zone, and that's where it will again create a room on the downside. So that is what the initial thought is. And the other thing that also sort of confirms of a pullback, which as I showed you in the RRG, which is for the Nifty 50 index, many of the stocks where the momentum seems to be turning around. So these will, I mean, these are the thoughts at this point of time. And specifically for the Nifty index, the levels that you need to watch out for very closely is the 40-hour exponential average initially, and then look at this high. So this high is nothing but at the upper end of the falling channel, and basically both of them are around the same levels. Right, both of them are around the same level. So these will be then the zone to watch out for, and from there we will take it on. Okay. uh, So I think broadly that is it. The only thing that you can again focus is basically the stocks that would be making new highs. I mean, because those are the only ones that are outperforming. So either you look out for the stocks which are near 52-week high. So in this case, I've chosen total market. There are some 50 stocks that are over there. Maybe these can be the ones, or the ones which are near the, I mean, which have hit new 52-week high today. So those are the ones. And broadly, if you remember the discussion 2 to 3 weeks back, I mean 1 to 2 weeks back, I think. That's where many of the cement names, the agri names, they were all popping up. Probably, in some of them, recently there has been a decent correction as well. So those can be some bit of pocket of opportunities that you might want to see. If at all there is a breakout, retest, and a pullback, and so on. So yeah, broadly that is it. Right, right now the market is dull. Uh, the only other thing that is there is that when I was checking, say, the other index. I mean, yesterday, if we see Nifty IT had seen some sort of up move. The so I mean, we had seen some initial uptick. So over here also, what is happening is that in this pullback, the 40R has, I mean, it has halted around the 40R. But if this takes out on the upside, okay, then what might end up happening is that the 40R will break on the upside, and even the RMI, on the daily RMI, it is on the verge of giving a bullish crossover. So at least there, you might have this trade that probably it can pull back towards the averages, okay, before even if it has to fall further. So that is another thing, that I would be watching out for very closely. So it is basically IT for some pullback, and the other stocks, which were doing well, like cement, agri, and so on. There in many of the stocks, there has been some decent pullback that we have seen. Maybe those can provide you some opportunity. So that is what I'll be watching out for in the near term. Yeah. So now, if there are any questions, you can let me know. I can try and address them. And please, if possible, ask for the conceptual question, because the idea of this session is to clear the concepts, and how you can make the best use of strike as well, to find out your stocks. So that is the whole motive. So if at all you are seeing some features which you're not able to understand, please let me know. I can help you clarify those things. What is your opinion on today's market? Ankit, this is what I think I discussed right now. So on the hourly chart, it seems to be forming some sort of a wedge pattern. So wedge pattern is basically, a reversal pattern, a bullish reversal pattern. On the hourly RMI also, we are starting to, not RMI, but I think on RSI, there is some divergence that we have started to see, right? You can see over here that there is some divergence that is visible. So uh, if at all, even if it breaks, my thinking would be that this level, which is say somewhere around 24 500 450, that should not be broken. And it can form sort of a falling wedge pattern. Okay, so falling wedge patterns are usually a sign that the momentum on the downside is losing steam, and that's where a turnaround happens. Then an up move can happen. I mean, you can simply Google it. So if you Google it, and you can type about what does a falling wedge pattern mean. Okay. So this is basically the chart that I'm talking about. Okay. What happens is that after a decline, we end up seeing, this falling wedge pattern. And once it breaks out from there, it is an indication that an up move can come. So something very similar could be happening over here after a downtrend that we have seen. So watch out for that. And the other thing, as I mentioned, was watch out for the 40R exponential average to be broken on the upside and sustaining above that. So that's where then at 100 200 points after that, you will end up seeing some resistance at higher levels, and ultimately the aim would be to watch what the Nifty index does when it comes around 25 to 50. Okay, I'm not sure when will it come, but at that point it will be very interesting to analyze Nifty, what it is doing. How to check custom indicator, custom date in indicators tab using above 40 EMA. Okay, so yes, you can do that. So say for example, we will so DV, say for example, we'll take this high, right? Say 27th of June. So we can simply run it. Uh, so in technical scanners, 40 EMA. Okay, so basically, so in this custom date is nothing but your look back period. Okay, so you have to select that for which, from which date you want to see. So because Nifty index has started correcting from 27 June. Okay, so I will check over here which are the stocks on the daily chart which are above the 40 week 40-day exponential average from uh, it was 27 June, right? So from 27 June, and in this I am selecting a total. So let me select a total market. Okay. So over here you can see that these are the list of stocks, basically within the Nifty total market, which have been trading above the 27th uh, June. I mean, whatever the prices was. So you can see that this is this is Aditya Birla Sun Life AMC, Amber, and all these things. Okay, so this is how you can actually sort it out. So as you can see over here, there are breaks over here, but if you make it a line chart, you will realize that these stocks have not broken the 40-day exponential average. Okay, so as I mentioned once again, your custom date is nothing but your look back period. Okay, so from which date you want to see. The only thing over here is that you cannot choose a time frame between this. You have a first date which you can select, but the uh, from and to date, the to date will be today's date by default. Okay, that is what you will get it in the look back period. Sir, can you share one intraday example of using multi-time frame OI? So see, honestly, 5 minutes, 15 minutes, I'm not really a big fan of that. I can tell you positionally. So see, the concept is actually the same. Okay. Now you think of it this way. So say for example, let me explain you through pain. Okay, you might be able to understand it better. So imagine that this is your RMI line on the daily chart. Okay, so basically from this point it has been in sell, right? But in your hourly chart, okay, I'm so in your hourly chart, the way it will look like is something like this. Okay, so say this is your zero line. Okay, and over here say this is your zero line, right? So now what happens is that if I take this RMI, it will be something like this. No, it will be something like this. So basically, this is the point from where it has gone sell on the daily. Okay, and this will be, say, example of that point. So what will happen is that even when the Nifty index would be falling, so it would be falling by giving some pullbacks in between, right? So those pullbacks will be captured on the hourly chart, and after that, whenever there is a sell signal that is coming, okay, then those are the things to trade, say, on the downside, because over here this is short. The RMI is in sell, so that is why you will focus more on the lower time frame. As I mentioned, this can then end up becoming 15 minutes and 5 minutes. So 15 minutes you take it uh, to form a view as to what the index is doing, and 5 minutes you take it for execution. Okay, but the only issue is that this will be so fast and you will have to be really very proactive. Okay, honestly, I'm not that proactive. So but I can tell you, I mean, I have done many a times on hourly and daily, and I can give you those examples right away. So wait, let me move it to a new window. So say this is hourly chart. Okay, let me make it this. Okay, this is your hourly chart. Okay, wait 1 minute. Okay, and this will become your daily chart. So Nifty 50 over here, and let me make it a daily chart. Okay, so now see what is happening over here. Okay, so I think this is because of the template this is happening, but nevertheless, see, this is from 1st July. So the crossover has happened from 4th July, right? So let me do a horizontal marking over here. Sorry, vertical marking. So this is over here. Now you can see that over here, it has been in sell since 4th July, right? Now let me come to the hourly chart. Okay. And 4th July is at this point. All right. 4th July is at this point. Now see what is happening. 4th July end of the day is from this point. Okay. Now see what is happening. So a pullback is happening and then a crossover is happening. Okay, there is a small pullback, then there is a crossover, pullback, crossover. So now basically when you're using multi-time frame, what you're doing is that you're trying to understand what is happening on the daily chart, right? So on the daily chart the trend is bearish, so you might want to, I mean, you would be more interested in taking short positions. That is because the higher time frame is bearish. So then, the ideal setup would be to look out for the price action below the averages. So even over here, say for example, a bearish crossover has happened and the Nifty index has broken, below the averages, right? Mm, Sorry. So let me take this. Yeah. So you can see that, a break from the averages and a break from the trend line, these are good signs for you to go short. That is because on the hourly chart, okay, the main thing is that, the prices have gone below the averages, and on the daily chart, the signal is still bearish, right? So this is how, you can combine the two time frames. And like I mentioned, I mean, this will be happening at a rapid pace in 15 minutes and 5 minutes. Okay, so that is how it is. But the way of analyzing is the same. I mean, when it is in sell, there will be multiple cycles on the lower time frame that you will be seeing. So what you would be watching out for is when a bearish crossover happens, and at that point of time it should be trading below its key averages. So we consider key averages as 20-day period and 40-day exponential period, right? So if those criteria are met, basically you go short and then you trail the reversal level as per your risk appetite. It can be either a previous high or a moving average. You can trail it your way, right? I hope that answers your question. But that is how, you can trade, basically multi time frame. Two dates are not taken as it. Yeah. So DV, as I mentioned to you, you cannot put two dates, in the moving average. In moving average, we will assume that you are checking till today. Okay. And the first date will be the point that you will have to put. Okay. In heat map, you can see in between. But in look back period, the default from date is today only. I mean, sorry, the default date for today, I mean, from to date is basically today only. So that is one thing I want to clarify. Yeah. So it is only one day where you can see. Okay. So option trade with RMI, I hope you understood. How do we do it? I mean, you might find it a little difficult. To understand it at this point, but please bookmark this video, and whenever you're trying to see the signals, just come back to this video and see, because I have explained you the concept. This is how we actually look at it as well. uh, and you will see this happening time and again. Okay. So you can just bookmark this video, and then you can see this specifically that RMI explanation part, and you will be able to get better on it. But as I mentioned, 15 minutes, 5 minutes is way too fast. If you're able to execute it, then it's good. Else you can also take 10 minutes, 30 minutes, as the two time frame. But I'm not too sure whether that will work very well on intraday or not. So yeah, I think it's 11:30 now. So I think we are done with this session for today. Basically, just to summarize, there is nothing great that seems to be happening in the Nifty index. What we need to watch out for is whether the Nifty index try and close above the 40-hour exponential average. If that happens, then on the daily there can be a bullish crossover. So that could be some signs of a turnaround that we can see. At the same point, just don't forget the importance of this 24,450 to 24,500 level. That is like a very important support level on the downside. So if that is held at this point of time, the expectation is of at least a pullback, if not anything, and from there we will see what happens. Okay. Sagar, thank you. Strike. Now I'm profitable just trading in the stock instead of putting heads on index. No, you're most welcome, and I'm glad to hear that. Uh, you know, we will do our bit to give you all the support. And this 11 a.m. session is towards that motive, that we all learn together how to use strike more effectively, and how to scan the stocks more easily. So thanks once again for all the support that you all have given us, and we'll keep continue to do this show and learn together. So thanks everyone for joining. See you tomorrow.